What's up, everybody? Good morning, good morning, good morning. Get ready to get started here. All right, guys. What's up? Good morning. Good morning. Sorry, I'm running late here. All right, we got jolts this morning. Don't forget, we've got some data coming out. All right, below yellow line 4770, we're looking good. Right out the door, S&P 500, 4600. We're doing spaces again, so I'm double dipping right now to get spaces. All right, what's up? Good morning, guys. Love you guys. All right, let me make a little post here. Okay, so we're at the bottom of the box. Resilience is good. Let's go ahead and get in. Oh my god, come on. Are we good? Oh, okay, I got in fives. Oh, this is a shitty trade. All right, never mind. I'm just gonna hold a 5 spot. We'll just see. Okay, from here. No good. Junk market. Wait a second. All right, I don't like this trade I did. Very limited upside. I'm gonna get out of it in a second. If I get a first bump, I'm gonna get out. I'm gonna go myself. I'm running a little late today. So I wish I was in no trade today. It's almost like another sit out day. Oof. Okay, hold on one second, guys. Another crummy day. Boo. What's up, guys? All right. I'm gonna everything set up here. I'm gonna drink my drink. That's it. We're limited. We're limited. Let's look at Kiki really quick. No good. No good. No good. All right, I'm gonna get out of this. Any trade up towards here, that's it. Limited upside, yeah. It can run to half gap only if resilience is positive. So that's the only thing I'm looking at right now. Resilience is positive can imply a hedge pressure break, but to go from here to there is very rare, because not only are you breaking hedge pressure, which is less than 20% chance, going to bull zone. Remember, that's like a 4% chance to go from here to here. And now we're going to need an event like the jolts or something to get us going. So that's basically what it is. You understand that one? Okay, so I'm a little... what am I trying to do here? Oh, QQQ, similar. And then we got this in the way, so you gotta be very careful. Okay, so we're gonna wait on this. We're gonna wait for the event to come out. Jolts are gonna be the thing that's gonna move the market, so... I'd say maybe the last month or two, they have still been going up in another wave. So if we're starting to see some pullback on those numbers, that's really good, and that implies a hiring spree. And that's what you want to see at the first of the year. We're getting over the seasonality of the winter. So, once this goes away and the new year starts, you do want to see more people get their jobs. So at this point in time for this morning's trade, I would say that it's probably going to be nothing until those jolts come out. If the job market is looking better and people are going back to work, you can clearly estimate that the wages are coming down. Maybe the reason they're not getting those jobs is because they still want a higher wage. Well, lower wages would be lower inflation, which means, a lighter hand of the Fed. And that's kind of what we're looking for. So with the jolts today and then the minutes coming out, those are going to be some big moving catalysts, because the labor situation is still one of the bigger motivating factors for the Fed to do anything at all. So in this particular light, the market doesn't look too hot today. I took a small long. But I'm immediately regretting it. While the data does look good, I'm gonna have to require the event to come out to bump it up a little higher. We have a little bit of limited upside. S&P has like so many resistances between SPY 471, 472. Those are gonna be hard to pass. And we still have VIX. There's gonna be a volatility sensitivity today. So I really don't think that today's gonna be that big booming update that we want. But if there is, it's gonna be that random dice roll when that news event comes out. So I'm taking it kind of lightly today. Tiny little position. So what's up, guys? Sorry, I'm doing spaces again, so I'm live and I'm on spaces. Oif. back here. Sorry. I wouldn't call it another short day. I would call it a look. Resilience is positive. Resilience can predict hedge pressure break. That is a good sign. Can be a good sign because hedge pressure is in the middle of the box, and you know the predisposition for the market. Now again, this is a gamble on the news event that's about to come out. Everybody look at my screen really quick. Does everyone see this? This right here. This right here. Now, here's the thing. We have DD band breaks this morning. So this is going to be hard. This is not a good correlation when you have red lights. This is good when you don't have red lights, which is why I don't like it. Any other time, having a trade on the long side to push through the box is a great idea. This is a great idea. However, we're irrational. So it's going to be a coin flip. Okay. Coin flip. Because irrational. Everybody understand? Because irrational. We have DD band breaks on both the NASDAQ and Russell. Okay. So because of that, I'm trading small. Everyone see that? So today is a coin flip day. Coin flip. Coin flip on the news. Okay. Another thing is that we're above triple B, which is something we talk about all the time. There's a whole video we have on the sensitivity of the market to a catalyst or an event, sorry, when you're above triple B. So clearly right now, we're above this level. There's going to be sensitivity to an event. So the event's going to cause some movement, which is great. Remember we talked about yesterday as well. When you start to push through these DD bands, the market can just behave randomly. And randomly is, you know, it can be good and bad. Randomly means the coin can flip in the direction you want. Randomly means the coin can flip in the direction you don't want. We have limited upside as well because we have resistances in this yellow line here on the S&P. This is going to be a high volume buffer to get through. You know, this could just blast up on the event. This could blast up on the event. This could blast up. They can go down. So we're going to keep an eye on what's going on in these DD bands. And hopefully when that news comes out, everything stays on the positive side. So that's what we're looking for. And also hedge pressure can be a resistance. Bear zone can be in a resistance. Remember, when things are rational, we state that if it opens in the bear zone, it's usually likely to close in the bear zone. Open below hedge, likely to close below hedge. So the idea is that whatever happens, it's going to require an event, because other than an event, this thing is predestined to stay over here somewhere. Okay. So the event can coin flip us up. And even so, the ultimate high of day, I don't know. I don't think it can go any higher than that. The absolute high of day, because that's going to be your solid put wall resistance. So, sorry guys. Pardon me. The news interacts with there. Maybe tries to fight, and then here it's going to be just like a I think we're going to do something like this today. Okay. This is my guess for the day. Internal day, not breaking highs. On the event can kick us higher. We can see that. But I mean, just going to be highly predictable, I think. Oh, that's the Matt. That's the Matt Hugh Hefner picture. I was wondering what that was. Oh yeah, I got to tell you that. Don't forget me to tell you about my New Year's Day. My New Year's party. It was so much fun. I mean, the jobless claims tomorrow. Maybe we should go a little. Okay, so let me get you the timing on that event. So today we have 18 minutes. Oh, the ISM PMI. Manufacturer PMI is coming out as well. And the minutes of the Fed. This is going to be a pretty heavy day, guys. VIX data. I don't think we have VIX futures data unless you... yeah, I don't think we have VIX futures data. I'm going to make sure I make a note of seeing if we can't get that. It's a different exchange, so we can go buy that. We just don't have it. We have to turn it on to CQG. Okay, 1 second. So coin flip day, this is what I'm anticipating today. So I'm playing small just to wait on this. So hang tight. Hold on 1 second. I'm getting back in the feel of streaming in 2 places at once. Shorting HP is a good play. Today is not a good play across the board in any capacity because the market, like by general, is limited to the upside, right? But general, it doesn't want to break and go higher. The resiliency even being negative right now is not a good sign. Like this is a kind of a bad sign for today outside the box. So it's going to require an event to move it in any direction. And the events, you got a bunch of events coming out today: the PMIs, prices data, and then of course the JOLTS data, and then the minutes. You got a lot of catalysts today. So the market's going to be driven by a bunch of coin flips. So whatever anyone does, it's wise to play small. We also have elevated VIX off of triple B with VIX still in contango here. We know that anytime you're trading above here, the market can be extra sensitive to catalysts. You're going to get some movement. So down here, you're going to get like, you know, less sensitive catalysts, and you're going to get like razor sharp pivots. So we're going to have overshooting pivots today. Sensitivity to like all 3 catalysts. You got catalysts coming out, all 3 events could be a catalyst all day long. So today's just a terrible day to trade and trade big. So I'm trading tiny as I'm gambling on a coin flip 5. Something small. I'm in the range of hundreds of bucks rather than thousands of bucks if I do anything. VIX, I'm sorry, resilience being less than 0 does imply that we do have that downside there. But again, the irrationality means that we don't put a lot of stock or faith into indications today. So these are looking good right now. So the readings are back on, and these are bad readings. So I think that this is more likely to happen. The resistance here, resilience less than 0, also can pull off this box. So I don't like where I am right now, and the only reason a good long is available is if the coin flip kicks me forward. So this is more likely to go down because of the resilience number. And as long as these stay rational, the problem is as this goes down, these lights are going to turn red because the Nasdaq's going to break its band. Complicated day. But the question is, which direction we think we're going to go. I think that the market's going to not collapse on itself. I think it's going to go up before it does come down. So that's what I'm thinking. But yeah, this is all across the board. Nothing's looking super hot today. Nothing today is looking appetizing. Looking at the Fed today. All right, so resilience being kind of all over the place. It's a choppy flip-floppy day, so there's not really a lot to take from this one, guys. Give me a second here.
That's funny.
Yeah, no, I put that one out last night. That's a big level.
Oh, hold on, I gotta turn. Let me mute this. Yeah. All right, you guys, we're just chilling on this. Hanging tight. All right. Those data points coming out here. What's up, everybody? Good morning. So again, the handle, you get 8 minutes till some news comes out. Resilience is starting to fight, so we're looking good there. Wait, hold on. All right, guys, hold on. Trying to get into the space on this computer here. Spaces and streaming again. Double dipping 2 podcasts at once. The VIX risk interval? Hold on one second. Oh, let me put in a note on that. Hold on one second. That's a good question. I don't know why it's not updating. So it looks like our web scraper is broken on the CVOE side. I'm going to add this actually to this new thing we're building. So we're building this alerts thing for us on the administrative side. So the platform will alert us to like automated tasks. I mean, we just have so many things going on. Like I want to get an alert that says, hey, you know, run this process, or hey, there's a problem here. This should be showing the risk interval. We don't have the data here. I'll have to go calculate and give it to you. So yeah, thanks for finding that. My audio is on a feedback. Hold on. Let me mute the, oh, hold on.
Been kind of like wheeling a lot of.
I'm on a feedback. I hear Matt at 1 to 2 second delay. I did just join a space on this computer, but it's muted. You shouldn't be hearing me talking. Does anyone else hear feedback? Okay. Wait to speak. Ah, there we go. All right, better. Everybody hit that like button. Let's go real quick. Give us some love there. News coming out. News can go either direction. So downside, the problem is on the downside, we don't really have any supports. That's the one problem we have here. The S&P, any downside support, I mean, we'd have a red line to crush out. We do have a DD band to have, you know, hopefully support off of that. We're going to look for these lights to stay green. So Nasdaq is trying to fight above. Russell's trying to fight above. So just be careful. This is fighting red. So the S&P maybe can try to float. That's one of the things we do look for is the float. So this could be a leg inside of here. Clearly, you know, we could still be ranging in here before some more downside. I like to think that markets don't just collapse on themselves very easily. So just be careful today. We also have sensitivity to catalysts. So, or to events that can become catalysts. So be careful. So I'm just a very small, tiny little position here. Some gap fill and SPY. Oh yeah, let's go ahead and look at that real quick. Good call. Daily cart. My drawings in here. Come on. I need to redo my drawings to reset everything. Horizontal array. Yeah, this guy right here, right? 468.51. Is that the one? Okay. Wherever it is, right? Okay, yeah, there's that. So marking our gap fills, these are exit targets we look for, right? Clearly. I'm gonna mark some of these here and here and here. I haven't done this in a little bit. A hot minute. Let's clone these. I'm not sure if this was one or not. Just eyeballing it for now. I'm gonna consider that one filled. I'll have to go double check that later. What I'm doing now is an exercise called marking your open gaps. These are gaps that haven't been filled, just to have some data, some places to trade towards, some other extended targets. And you can always keep these things marked. This is your homework you do before or after the market. As you see, somebody mentioned there's a 468 gap to the downside. Very, 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 very cool. Thank you for reminding me of that. Okay, coin flip because irrational. Oof. So I just did something small. 2 minutes until some data comes out. So yeah, this is not the best. Now again, resistance off of hedge pressure and monthly hedge breaks and create some downside to next resistance. Here's your next resistance, just like it shows on here. Do I want to short this from here down to there? We'll see. We'll see what happens with resilience and the rest of the stocks after this event, this news event comes out, and also the minutes, right? The minutes are going to imply any future thoughts towards what the Fed can likely do for the next go. No feedback. Okay. Be very careful. So this is our range for today. You can buy bond VIX. VIX has no bounce points right now, so it's just kind of in no man's land. Got a minute going off here. Those JOLTS numbers, we'll talk about this in just a little bit. This is the available job openings, and what JOLTS are. Bureau of Labor and Statistics, available job openings that can be filled in a 30-day window. They're actively being recruited for. Oh, here we go. All right, let's look at these really quick. Jolt, where's the data? Came in as a little bit of a miss here. An 8.7, actually a little bit of a less, which is good. Less is good for JOLTS. Less is more. 8.7, which is great. So flat on the last data point. It's not bad. It's not good. It's not worse. So it's decent. I don't know if we're gonna get anything good off of that. Hold on. All right, let's look at the let's look at the other numbers. The PMI, ISM manufacturing numbers came in a little bit under. It's not bad. None of them look bad. It's more like flat, and flat is good, I think, at this time. It's not implying, the greater trend is still there of both the PMI being pulled back and the JOLTS being pulled back. JOLTS coming down is great because it can imply people are still getting hired. The real data point tomorrow to go with that are the continuing jobless claims. Are those going to also start coming down? If there's people that have been unemployed are not able to get a job, right? Now, what today's data implies is jobs are being filled. So they're going away. Either two things happen. Either somebody gets hired for that job or they eliminate that job, like they don't need it anymore. So they're not going to hire. So say that you have like 3 accountants you need to hire for, right? And so you hire one, well, the JOLTS come down. Well, you close one of them out and you're no longer hiring for it because you don't want to hire. You don't want that job there anymore at your company. You also, JOLTS will come down. So JOLTS can come down for both good and bad reasons, right? So you have to pair it up with the continuing jobless claims to see that job that disappeared. Is it because somebody filled the role, or is it because the company is no longer hiring? The former is a hiring spree. The latter is shrinkage, right? So you have to kind of see it both ways. The data came in relatively, well, I'll say flat today, which is good. I wasn't expecting anything big and large. But I'm glad we didn't see like a huge change over the last week to imply that there's some seasonality effects. Job openings, jobs getting eliminated could be your holiday help. You filled up those roles and then go away. So we're going to have to see if the first time jobless claims, which are the first round of filing for unemployment, which comes out tomorrow as well, are your seasonal workers that might be looking for work. If we get a big bump there, that could imply, some negativity. All this talk about jobs is really to kind of predict what the Fed's going to do. If there's a good kind of lubrication in the jobs market, the Fed is very likely to assume that wages are going to come down. The competition is going to bring wages down, which is a driving force for inflation. If people are getting their jobs back, you just can assume, and the elevator pitch is that the Fed's not going to likely raise rates, that the soft landing is taking care of itself, and that the job market is healing itself through natural means. And then inflation is going to come down naturally. And that's kind of what all this JOLTS talk really means. And it's a more important data point than most everybody thinks. It doesn't get a lot of airtime on CNBC. Everyone likes the heavy hitters like CPI and etc. But to me, JOLTS is one of the most important data points because it can predict the CPI. It's one of the lead ups into those data points. And every time you hear Powell speaks, every other word is job market, job market. What do you think he's looking at? He's also looking at the JOLTS. So let's be traders and be one step ahead, and let's look at the things that matter ourselves instead of reacting to things when they come out. So the data point came out. It's not bad. It's not terrible. It's probably a non-effect. The market is responding pretty favorably to it. The PMI as well. These are all decent data points. not afraid of the market today, but even so, the structure of the market's not super bullish for this morning. It's just kind of like a no man's land, probably another choppy day. But in general, I don't think that was damning news at all. I think it was pretty decent. I like it. It's pretty decent data, guys. It's not terrible. Minutes, really not. All eyes on the minutes now. We can see if these jobless claims start coming down to go along with the jolts also coming down. Essentially, you're trying to predict what inflation's going to be doing. This is good. The more that this comes down, obviously people are getting their jobs back, which is good. Yeah, 47.40, possibly. Resilience kind of healed itself a little bit, and we're out of the problem zone here for the two indices. So again, like I said, with resilience being positive and no longer irrational, the hedge pressure break case is back on the table. So the one I want to see with res greater than 0, check, is to hit hedge pressure and push through the box. About a 10-point move. It's like $500 on 5, or sorry, 250 on 5. It's not a big run. It's decent here.
Asana helps you keep track of all the details in one place.
All right, how are we doing? Still $100 on the table. Not a big trade today. Here's that yellow line tap. Now what do I want to do? Hold on to this to bet on a hedge break. There's resistance here, resistance there. It's going to be a hard move to go to the upside from here.
Rather quickly at a Casey, go right ahead, man.
Meh. Meh. Yeah, the only caution with it with VIX is if it bounces off of something like VIX hitting something. We don't have rules for the box being part of VIX, but it could eventually be one. But usually it's just hedge pressure and bull zones, and monthly hedge pressure. So anytime the VIX hits something, like if the market's going up, VIX is going down, and VIX hits something, we usually assume that that can be a bounce, which can stimulate volatility at the end of a move. It's usually like the end of a move can be triggered by the VIX stopping in its tracks. So if this were to rally today and VIX were to sink down and VIX hits here, then I would close out my trade when VIX could potentially bounce, because the volatility can make it choppier. Yeah, great question. So here we're just kind of waiting on this. This data looks good. This data looks good. Nasdaq is trying to break again. I don't hate it. I don't love it. This and this is not showing downside pressure. It's showing decent trying, attempt. But if RS starts to go negative, the market's gonna, start to try to pull back a little bit. Oh, meh. All right. Meh. Yeah, 100% agree. Boo. All right. Let's see if I should be focusing on my trade here. I was playing in the 250-ish range here. Again, this decent, this meh, this meh. There's really no indication of up or down movement today. Be careful with S&P breaking DD bands. Oh wait, hold on. Where's my DD bands? This thing out real quick. Okay, so there's the Nasdaq DD bands, S&P DD bands. Here they are. Oh, here they are. Perfect. Okay. Meh. We do have float failure on the S&P, which is good. Now the market's completely random from here. Let me go ahead and all right, let me get minutes coming out today as well. I don't think the market's gonna like capsize without them before the minutes come out. It's gunning to fill that gap. Also, keep in mind the S&P does have a gap that it's going to try to fill, 468 in like a quarter, I think, something around there. And we have the minutes coming out. I think that's kind of the bigger event, jolts and everything, trying to move the market up and then back down. Anytime an event creates movement and then you return to the price before the event, we call that pricing it in. Pricing it in just means that the market effectively guessed correctly what the value of itself would be based on, or traders guessed correctly based on the outcome of the event. So once it passes back to its initial place, or we bumped up and came right back down a minute ago, it's a non-event. So basically, when it's a non-event, it's no longer a driving force of the market. Right now, all movement is predicting and looking ahead of the next event. So any downside you see right now, people are forecasting what's going to happen with the minutes coming out. So this is what we need to look for today, the bigger event. Right now, the market's trying to price lower to forecast the effect of that. Like, the markets are always forward looking. So minutes coming out, I think we're going to have a choppy, weird day leading up. Now, it's hard to think that we're going to take a nosedive and just crash out before minutes come out, but anything's possible. The news around the world is kind of damning, I would say, in some capacity. But the minutes are going to be a big mover, and we got all day to wait for that, and that's kind of the crummy part. Waiting all day for events. Yeah, give me a moment to lit up. Well, in general, like the greater map, let me just make it bigger here. So in monthly maps, if you guys are hearing Adam talk about that, is one of the indicators that we built a rocket scooter. It looks at options and what the landscape looks like over time. So for instance, options that expire in 3 weeks, we can see what's going on 3 weeks ahead. Options that expire today, we can see what's going on today. It paints a picture and kind of maps out the terrain over the course of time. And we go as far out as to March of next year. And the way that it's looking is that, as Adam is correctly stated, in the next week or two, the market is starting to show signs of possible volatility. Clearly, we see that in the VIX today. The VIX is going up to weekly highs, clearly, and it's starting to move a little higher. And it just means that the market is preparing for a lighter, trading week. Fewer people trading, less liquidity, and of course, some bull side selling, which is what we've been seeing the last couple of days. But then a week after that, it snaps right back into place and still says bullish. So what it's just telling me is that the news events coming out to start the year off, people are expecting a little bit of volatility, and the longer haul bulls are still there, which is why, like, initially this morning I said, the market's probably going to be blah for a little bit, but there are still bulls waiting in the sidelines for dips to buy. This volatility can create the dips for people to buy, and I think that that's what we're leaning towards. I don't think that in this mode, we're breaking that 4,700 and trading lower. I think we're just gonna have a bigger cycle like we did that last week when we sold off, or 2 weeks ago. And we're just gonna trade down and bounce right back up. This is what I think we're gonna see. Now, again, it's just my opinion. What do I know? But at the end of the day, it is an interesting sign, at least, to say that the market's listening very closely to these news events. They're gonna create some movement. And with VIX in this elevated state, like it's trading a little higher, above some key levels, it just means that the market's going to be extra sensitive to news. So these are going to be weeks where the CPI and all the other different ones that you read aren't going to be non-effects. They're going to be big movers of the day. So the day of like 30 and 50 point S&P moves is back. That's on the table for the next couple of weeks. So just be careful trading in the big event days, because they're not going to be mild. I guess that's the takeaway. The monthly map shows that. Once the energy drink kicks in, I try. Until then, I just sound like a mumbling fool before I wake up. Maybe I still sound like a mumbling fool after I wake up. I don't know. It's one of those New Year's Eve was such a great event. I'm still feeling it, so I'm still waking up 2 days later. All right. So I'm not liking what I am. I probably should start trimming some of this a little bit. Gap to be filled. The question is, what happens at the gap fill? Now, again, this is that downside target. We're outside the DD bands. I probably should just close out. Resilience is still fighting to stay above 0, though. That's the one thing. That's the one takeaway. So it's going to try to move higher unless res just pops down. That we are irrational, so the indices can move faster than the stocks, and it is one of the things that we're seeing. Remember, we said coin flip because of irrational. That was one of the things we were talking about. So the coin flip is going the other direction. Can we get here and bounce? Maybe. Bounce. This is really bad. All three irrational now, so don't like it. Monthly maps fanning out like this is going to show volatility growth over the next week. Then we're snapping back to bull side market and short squeeze market. So you have a volatile week, which means the market's be extremely sensitive to catalysts, and we're going to be overshooting pivots and all kind of stuff, right? So not really the easiest trading week. Dips to buy. The greater bull market is still here, so dips to buy, bigger dips to buy is my new plan. So I'm not betting on a market crash. I don't think that we're there at all. Bum, 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 bum. Yeah. Shitty blah day today. Also keep an eye on this yellow line. Remember, yellow lines are great pivots, but this is one of our predicting pivots here. This is a really solid one. I'll show you on Thinker Swim. I have it marked as well. Look at the hourly candle, just bop, bop, like this. Not so good. But nothing to play off of. It's random. Yeah, it's basically random and choppy until then. So I really have no desire to do anything. Like I said, I'm playing in a smaller range. I do want to bet that the market's going to be volatile. So if we dip and we hit the gap fill, I might long again just to trade back into here. Trade against bear zone to close out. There is really no liquidity map other than the monthly hedging pushing towards the weekly hedging. So you have that monthly hedge pressure still driving the market higher. But we can trade down into that today. So clearly it's not a lot of... I don't have a lot of love for what we're seeing on them. Not so good today. I'm with Jared. I don't trust. Anytime you have that flow failure, I don't trust the market from here. It's 100% random. So it could dip and just rally. It's completely coin flipping random from now. So there's nothing that's going to predict anything. Watch. What it is when you have float failure, which you have. Float is a condition where if the market, if DD is greater than half and you touch the lower band, the float has failed. The market is going to try to hedge itself off of this like it tried, right? From here, the market is just broken structure. There is just no... It can't contain itself. So once flow failure happens, the market's going to be random and weird. Sometimes it can do this and then rally randomly with no news or no event. That's what we're looking for today. It's likely going to be random and weird. So like I said, just get a small position. There's not much going on here. Boo. I'm just going to text support real quick. Yeah, kind of random day today. Random and crummy. I'm getting hungry. All right, so watching paint dry. Let's see. You want to hear story time? Story time. Ooh, yeah. Yeah, man, I just don't like this. You get more angry stares when you're a bear. That's kind of the rule of the world. Yeah, sorry, yeah, but not when you're a beaver. When you're a beaver, people love you. She didn't even hear the joke. All right, here we go. See, coin flip, guys. The market's going to just, see what I'm saying? Just randomly goes in one direction. This is what I talk about. I write the word coin flip up here to let you guys know that you're just literally playing roulette right now. Do you see how this works? Do you see how coin flip is just random? Market's just randomly pivoting. This is what happens on float failure. Float failure equals don't trust candle data. Don't trust any action. This is one of our main rules on this. Don't trust momentum. Any momentum. Okay, don't trust any momentum. See how the market just picked up volume and randomly started trading higher? This is what happens when the float failure happens. It is completely random and weird. Look, just floating along, and look at this random volume spike. You see how this is? That's exactly what happens. Does everyone see that? This is why we say down here, there's nothing going on. So why am I still holding on? Resilience is decent. DD band is broken. I'm in a small position. Nothing too bad. Well, the coin flip is like a 50-50 shot. I'm just kind of hanging on. It might go my direction. I can double down on the bounce point. At least take myself out of this loss. So again, I'm trading irrational and keeping it small. That's what I do. There's really no technique that we teach for trading down in here. I'm just kind of winging it and trying to drive out of this mess on a manual side. Does everyone understand how all this stuff is saying coin flip and random? Don't trust any momentum. Market's going like this, and all of a sudden it just spikes up with volume. You see that? We predict that behavior is there. Randomness. Coin flip is random. Random, 100%. Could you have predicted a big volume spike there? Nobody could have. We can just predict that it's unpredictable and random. So because of that, my low probability trade can have a 50-50 shot of going my direction. It's kind of neat that the coin flip aspect can take a negative thing and turn it into a more favorable thing for yourself. Imagine if you have a 5% chance of winning and someone says, we just upgraded your 5% chance to a coin flip. And you're like, wait, and now it's 50% chance? It's not really 50%. I know we just say coin flip is 50-50. It really just means random, and there's no gauge of the probability. There's no number you can attest to it. But we say that there's just no gauge, so it could be anything on that spectrum between 0 and 100, which is great. So you can bet that very bad probability can turn into an okay probability. We had a great turnout. This is our first space coming back, and we're hosting our own space. We're start doing probably daily trading spaces, maybe a week or two. Decent turnout. All right, so again, random crap. Whatever happened to the cat cam? You know what? I keep forgetting there's all these things I've been trying to do. There's so many millions of things. The platform has derailed all attempts of me to get cat cam up. And I know we need to get a camera on the floor so we can watch the cat. Like one of my cats right now is just flip-flopping around like he's like just like rubbing, you know, like this literally contorting and rubbing his back on the floor. Why? Because cats are goofy, and that's easy way to get cheap and free views. I mean, that's unfair almost. With cats on the stream, it's a no-brainer. Go viral overnight. That's right. Let's get some likes on that stream, baby. I guess I'll put the camera on my face as well, but the cats would bring in more views. But all attempts to get everything set up have been derailed by new platform things we're trying to fix and work on. Like we're finding is like more and more people are using the platform. We're just finding more bugs and more browsers, which is great because we're fixing them. But this week we have a whole lot that's going on. We're trying to create like our alert system for us that allows us to find things that need to be fixed before you find them. So we'll get an alert that says like data feeds late or hedge pressure's missing or something, and we could troubleshoot it on the fly. So we're creating this alert system that'll be platform wide and be useful for all of our vendors as well who create tools. We're updating our data feeds to the full SIP. Now I'm telling you again, we had this talk yesterday, and here's how it goes. I'm gonna let everybody in chat vote right now. We're gonna do it the old democratic way. So everybody, we're gonna do it the put your pebble, everybody grab a pebble off the ground, grab a white one and a black one. You got 2 buckets, or we got one, actually hold on, you got 2 buckets. Okay, everybody grab a pebble, or you put your vote in one bucket or the other. Okay, the data feeds we have now, they're candles that you see. We buy a portion of the volume, but not all the volume from the exchange. Why? Because we don't use candle data. It's just cosmetic. And everybody that's like coming in here and says, oh, you know, well, the candles aren't updating. Well, they are. They're just not full candles. UVXY, you can see that. There's little wires in the middle. There's not all trading data because we don't buy all the exchanges. If you buy all the exchanges, the candles will be full and developed and look just like Thinkorswim. Now, here's the pros and cons to that. Number one is candles are formality here. All you care about is the last price, and this does update in real time. The historic candles are not necessarily going to have all the volume. This is just updating the price of the exchanges we do buy. There's a bunch of exchanges you might not know. It's not just the NASDAQ or New York Stock Exchange. There's exchanges in Philadelphia, there's exchanges in Boston, and they mirror those other exchanges, but they don't have all the same trading volume. Most people trade on certain exchanges, right? Now, let's go forward. People say the candles aren't updating. Well, they are, but we're going to buy the bigger data now that we're opening the marketplace. And when we first launched the company, candles are just a formality. Our first app didn't even have candles, but we put them on there and we told everybody, hey, for like the first year, we're going to have these wiry candles. And instead, we'll take that leftover budget and hire developers and build features. And everybody voted. And that's what we did. And now we're at the phase of, aha, everybody's coming in and saying, well, how come it doesn't look like TradingView or Thinkorswim? I'm going to go, well, that's because we didn't buy the full data package. Okay, well, we want that. So here's your votes, everybody. Now, again, we'll take any complaints. There's some people that just don't get the message or just whatever the case may be. So here's the message, right? It's going to cost me an additional, me as in Matthew, your best friend and cat owner in this chair. It will cost me an additional $10,000 a month from my pocket for you to have something that you don't even need, but just so that you have it for our tools. Now, you'll need it for technical analysis, yes. For any indicators, you're going to want all the historic volumes so your indicators look exactly like they do elsewhere. But I'm going to pay $10,000 extra a month, and I'm going to ask that each of you pay $3 a month. Does that sound fair? Yes or no? We had one stink of, well, the principle of the matter is I don't think we should pay because we're lifetime members. If you don't want to pay $3, then I'm going to put my $10,000, buy myself like 4 pairs of Louboutins every month. I'm going to make sure I do bottle service with the other $5,000. So on principle alone, here's the principle. Why don't I keep my $10,000 and everyone else can go to hell? There's a principle too. So the principle is, will you guys pay 3 and I pay 10 grand? Let's just call it fair for the full candles and better data feeds and more robust data feeds. And also just know that like when we say lifetime, everything is free. Not everything is free. You go trading in your brokerage account, they will charge you commissions. That's not us. Everything that we charge for people will be free for you. So tools, platform features, whatever. If the exchange charges you $3 a month for data, they charge you $3 a month. If the exchange, if your broker charges you $10 a month API fee, or your broker charges you 70 cents a commission per contract, what those things you pay those people. You don't pay us anything. And that's where the ball gets dropped. And I think people are, not everybody, just one or two people just don't like to read. And they don't read something, but they're very likely to complain first before they go read anything. And I just have to remind everybody, I love you and I love everyone. I love everybody having a voice. So don't let me silence you if you really have a complaint. I'm just saying is that it's very lucrative to go read first before you are upset. Now, I don't care if you raise a stink here. We're all about transparency here, but it's before you get upset and raise your blood pressure over nothing. Nothing here in Lifetime says free market data for life. Zero mentions of that here. So your incorrect assumption that your market data will always be free because it was free is an incorrect assumption. It's not promised you. As a matter of fact, the only mention of data also says sold separately. So when we update that, it will also say candle data on all of these $3 a month or a 15-minute delayed data for free. So right now it's free. What we will incorporate. So the idea was like, well, Lifetime means everything's free for one price. Well, like everything from us is free at one price. The auxiliary things you might still have to pay, but let's just kind of be real, right? It's $3 a month. And so if the group doesn't want to do it, we voted as a team and everybody unanimously was like, I want the data. It looks like you guys are voting for it as well, right? You don't get an option, by the way. We're switching the data if you want to or not. Your option is if you don't want to pay the $3 for the data to the exchange, your data will become delayed data. There is no more free option. The API we have now, we have to get rid of because there's no way the marketplace can sustain itself with somebody having this option. All the vendors' tools and technical analysis tools will be not correct because it's missing the data. Millions of people will complain if our marketplace gets that big and it doesn't have full candles. It's kind of that weird kind of thing. And Connor is literally saying the one thing I didn't want to say, and that is if you don't have $3 a month, you shouldn't be fucking trading. Jesus. But I mean, it's a team effort. And like my headache was somebody's like, well, Matt, why, it just is a principle of the matter. The principle of the matter is we're a team. Don't look at me as like I'm a business owner and you guys are the clients. We're a team. And as a team, I'm paying the lion's share from my pocket. Imagine what $120,000 a year would do just so you can have better candles. And if you guys don't want to pony up something like $3, then it just means you expect me to do all the work. And that shouldn't be fair either. Like as a team, I'm going to take a big hit so that everyone else can split the bill between them. If I pay $3 a month for our 5,000 user accounts, just imagine another 15 grand out of my pocket. That's why we can't pay on your behalf. I can just tell everybody you want fuller candles and deal with it. Don't care. Yeah, I don't like where we're going. I'm just going to flatten this out. 300 loss, call it a day. But you see what I'm saying? It's not something we make either. The exchange charges you. And another case to this is every trading platform in the world also charges you for data. Every single one of them. So it's unique that you got a lesser API for free, but that was what we did initially as a business decision, right? It was, we're early on. Let's take the free data for you guys. You don't have to pay for it. That way we can get things going and work and take that, shit, 10,000 plus another 15 for the $3. $25,000 a month pays a lot of salaries to build stuff. And everybody goes, yeah, we want the features and the free data. And now everybody's like, well, we want the candles and the features. So now we're like, okay, let's vote as a team. For that cost, it's nothing, right? But there will be a free option for you anyways. It will be delayed data. So that's it. And so we're now at par with every major trading platform. You will pay for data from everybody. And it's the same fee. It's like nominally $3. That's the exchange's fee. And some places will charge you more. For example, if you go somewhere and they charge you $5 or $7 a month for data, they're putting a surcharge on it to make a little profit. I'm even promising at this point, I'm not promising forever, but at this point, I'm not doing that either. it's a pass through. That $3 immediately goes to them. I make $0 off of it. So it's not even like, oh, let's make a little money. We're not making jack on it. Like I said. So everybody take a vote. I mean, because I you know, that 10K is 10 bottles of Dom at the club, and not only regular Dom, but the glow in the dark Dom that looks great when the cute bottle girls swing it around in the air. Or fuller candles. How should daddy spend his money? And let's have a quick vote. Everybody says they're okay with it. All right. Boy, I do like that glow in the dark green label though. Oh, I don't know. What should we do? Looks like everybody's okay. And if I know that we don't need it, but the marketplace is going to need it. So the answer is just to see how everybody's okay with it. I think as a team, we should work together. And the funny thing was that the one complaint was, this is so unfair. And I'm like, is it though? I think the unfairness is, you want me to pay for everything and you pay for nothing. And I think that's wholly, it's not a good friend, by the way. A good friend doesn't go into their friend's business and say, hey, oh, you're a restaurant? Cool. Can you comp me and I eat for free because we're friends? A friend goes in there and orders twice as much to support their friend's business. Right? You don't go in there expecting handouts and discounts. You're not a friend at that point. So anyhow, I'm just saying, that's a big expense, and we're choosing to do that for the integrity of everyone on the platform. We think it's a better business choice to have fuller candles, because half the people will say, well, the candles aren't updating. I'm reading tech support now. Well, they are. They just don't have all the volume. So it doesn't look like they're updating, but they are updating. They're just updating with nothing because there was an exchange. So see how we have to fight one problem and it creates another problem. So the answer is we're going to switch the data despite what you guys voted. I just cared what y'all are thinking. And if you don't like it, there's really a 15-minute free option. It's delayed 15 minutes for you anyways. So we have something for everybody anyways. And we'll also have the Light app, which doesn't use any candle data. If you don't want to choose to select any data, you can still use the old Light app, and then you just don't have candles on your platform. So in reality, there's a solution for everybody, right? So there's really no downside either case. And we're kind of in that, well, that's the best of all worlds. Yeah. Anywho, drink water. Yeah, so the idea is anything that anyone else charges you, it's not something I can control. And then the answer is, well, why don't you just pay for us, Matt? And that's really what I'm hearing. Because the exchange will charge me whether you pay it or not. So if I pay on behalf of everybody, then our company will be in the red. Right? So therefore, the solution is, if you follow all the pathways, if I pay for everybody, then the company goes underwater and we just shut Rocket Scooter down, period. Right? So it's not even a feasible decision economically. So the outcome of me paying your $3 is that, so here's the options. Either A, we upgrade the data and you have better candles and they're more fuller and no drop data or whatever. You pay 3, I pay 10K. B, we do nothing and then you have the candles the way they are. But then all your technical indicators are going to be missing data. Right? Or C, I just pay for everybody and then we shut the platform down and you don't get a platform. So which one do you guys want? You see where we are? It's not a decision I want to make. I wish we didn't have to make it, but it is the best decision when you look at all the different options, right? You're like, oh shit, he is right. I'd rather have the platform. If I ask this guy to pay my $3 for me, he's going to close the platform down and go away forever. Shit. Well, I definitely want the platform. Okay. Right? New data will be on the platform probably in about a week to a week and a half. We're working out the details right now. Like I said, it's going to be fantastic. It's the highest end data that's sold. It's every exchange. It's every volume. It's every trade. It's everything. It's going to be, we'll be at par with Thinkorswim at this point. And believe me, we do everything we can to engineer everything to be the lowest cost for you guys, because we definitely look into that. You see what I'm saying, guys? You good with $3? I think it would be nice that everybody understands that. And again, we have the Light app, which is the non-platform version with the same data. You can get your hedge pressures and resilience and all that. from the Lite app if you don't want to pay for the data. But if you want the trading platform, we're now in the mode that we're now upgrading to be at par with the big boys. And I think that's fair, right? And they all charge $3 too. You can't get away with it. The fact that you guys got it for free for a year was because we gave you a fraction of the data, and the fraction feed is free. But everyone else will charge you. And Thinkorswim, technically, they make their money from you. They just rip you off with commissions, right? Everybody makes that fee somehow from you. Yeah. Absolute facts. Yeah, and I don't think it's, I completely agree with you. And the argument is not that it's the money that people matter. It's like what Jay Hicks has said is the important part. It's the promise that there's not going to be rug pulls. And I think the fair is, now let's take the side of the other side of the argument. The argument is fair. It's the rug pull effect, as in you guys rely on this and then all of a sudden I upcharge and keep adding fees. Like, it's like you get someone addicted to something that's awesome and then you start charging more and charging more and charging more. It's very unfair, right? To the consumer. And that is a very fair position. I'm glad that Jay Hex mentioned that, because that is really the complaint. Nobody here is complaining about $3. It's complaining about protecting the integrity of the lifetime system. And that's actually very, it's a very valid argument. So let me make a promise to you to satisfy those. So it's like $3 now and then $5 next week and $10 next week. And all of a sudden your lifetime now has a $400 a month fee to go with it. I'm promising you that's not going to happen. So here's, and I'm glad you brought that up, because that is really the fear. I think the protest is as ample, and I do appreciate the person who brought that up. It's principle of the matter. And the principle is that it's not my charge. It's not my profit. It's a fee from the exchange. So the promise is that the lifetime group is not going to be asked to buy anything that we make going forward in the platform, which means any indicators, any features, anything inside the platform's a box. So anything that we make in the platform, lifetime should get for free. Anything auxiliary on the outside of the platform, data, commissions, trading data, I will pass through the charge that they charge us to you. And I will work my best to give you a free option so that you don't have to pay if you don't want to. That's the promise, okay? Anything that you buy for the platform that other people make, you don't get for free. When the marketplace comes out, it's the same argument. You don't get all their tools for free either. You don't get a free ride in the marketplace. So anything anyone else makes or anything anyone else charges, you're still susceptible for, but we'll try to give you a free option or make sure the platform doesn't rely on the paid option to function. The one exception is candle data, because you need the candle data to fuel some of these things. So in the rare event that there is a charge that sneaks in, we're going to optimize it to be as little as possible. I can't imagine $3 here, $4 there, $10 there happening 50 times. It's data feeds. You get one data feed for equities, one data feed for futures. And in the future, there may be one for options. If you guys want an options ladder, you may have the same argument again. There might be a $5 a month, $10 a month or whatever to get your options data in the platform. And again, we'll make it optional. You may not have to pay to have that. So is that a good compromise? It's more like Lucky Luke. I can take the stance of you, and I agree with what you're saying. It's like, it's only $3 a month. But the argument is the principle, because people in this industry are kind of fraudulent and shady and shitty. And I agree. I would want the protection too as a customer. Well, I love hedge pressure, but Matt said it was free, but now I have to pay $20. Well, the real argument's not the $3. It's what about next month? Is it $20? What if he's going to add a $50 charge a month after that? So that does make a lot of sense. As a customer, I would want to feel safe too. So that's my promise to you guys. And that does make sense. Y'all follow? It does validate the argument much more. It's really trying to protect you guys from a rug pull or bait and switch, right? Which is a very fair argument. I'm glad y'all are bringing it up. I know we're laughing at it's only $3, but we shouldn't laugh at the principle of the matter of somebody actually looking out for you guys. She's actually saying, well, guys, listen, it's $3 now, but what if you change it to $5? What if he makes it $20? What if lifetime really becomes $100 a month after lifetime? It's really a good argument, right? Yeah, I could, and that's kind of the, it's really a good argument. And so that is my promise to you guys, is that there's not going to be like a rug pull on our features. Anything anyone else makes or anyone else charges, we're not going to pay for you, and you'll have to pay for it yourself. And so if it's required to run the platform, we're going to try to make it as low as possible and not take a profit on it. And if we can, like I'm not taking the $3 and making it $4. I could have told you guys it was $4 and pocket an extra $1 a month per person. We didn't do that. We're not going to do things like that, right? But we are going to do the best we can. It's one of those sticky situations where if we don't have the fuller candles, more people complain than the people that complain about the $3. So there's no winning solution here that everyone's happy. It's the compromise that you have to take as a business owner. And so if we have to make a compromise, we will try to give a free option as well. It may not be the best option, but at least if on principle you don't want to pay, there can still be a free option if it's available. And we'll try to make one every time. And I like to take both sides of the argument. I used to do speech and debate. It's very fair. It's a very fair argument. So it's kind of unfair for us to ridicule, and I do apologize for that. To ridicule, it's only $3. It feels unfair because at first I'm taking the stance of that's unfair to me. I'm paying a whole lot, right? But now I'm going to take the other side of the coin and say, okay, here's the other side of the argument. It is fair. So there won't be hidden fees for stuff that turns into profit for us for lifetime. If you buy lifetime, all the platform is free. Inside the platform is free. The stuff that powers the platform may have a charge, but it's like $1 here, $3 there. And it's at par with what everyone else does. And we're not going to put like hidden, I'm not going to put profit on that for myself. So there you go. So kind of in the middle. So Artie says, been Matt with longer than pretty much most here. David's been here since the start for the most part. Matt's always been good for his word. Most honest deal you've worked with. Thanks, Matt. Oh, no problem. And he's a lifetime. He's one of the first lifetimers, even from the 2016, 17, 18 days, way back in the day. Artie's been here forever. Matt could easily go sell this all for millions of platform rocks and it's dirt cheap. Yeah, that's true. A private equity group can come offer me $50 million to the company. I could sell it and they can shut down tomorrow. That is a very valid argument as well. But I don't want that to happen, clearly. But okay, see, thank you. You're going to come here. Some of those transparent, honest guys in the stream. No problem. See, I don't mind. Like, this is a public stream, so I don't mind like showcasing, the ethics that we have here, which is really cool because all that it proves is that we as a community are the strongest trading group on the planet. We all do our due diligence together and we discuss these bigger issues with you guys so that we're not like behind closed doors making decisions you're not aware. Like, we will face them and say, this is what's going on. What do you guys think? Let's take a vote. Because we really care about what the community thinks. But you also understand the position I'm in, right? Is that Rocket Scooters simply can't afford to pay your $3 a month because that adds up with as many users as we have now. Just imagine we open the marketplace and have 100 vendors with thousands of users each. Imagine us going from 5,000 user accounts to 50,000 in the next year. Imagine just to have fuller candles, it's hundreds of thousands out of our pocket. It feasibly scales to a point that would be a bad CEO if I made that decision. And so, case in point, every other platform in the world charges for data. Well, why would we be the one that doesn't, right? So it's a great decision because at the end of the day, you guys, it's best about this. Very nominal charge. You'll have better looking candles. Your data will match cross-platform trading. If you think or some will all look like us. Now we're at par with the big boys. Now we have faster, better integrity on data. If you're, people feeling like the candles are not updating when they are, all those problems get solved for just a nominal fee. And when I put it all together, it's like, okay, it does make a lot of sense. And then the nail on that coffin is that if I'm going to pop out 10 grand and everyone pops up 3, I think that's great. I think it's a very great compromise because, we're all paying together for all of our benefit to have something cool as a team. And I'm paying the lion's share of the expense. I'm paying more than all of you are paying together. And I consider that a gift to the community. So you were saying your service versus third-party service happens to many issues. Yeah. Exchange fees come with every platform and you can't escape it. So I do like the idea of making sure that you guys know lifetime is lifetime. It's not lifetime with a rug pull. And you see that crap a lot of times in this industry, which I understand. Bait and switches and things like that are unfair to the customer. And I don't disagree with that position to take. And it's more principle of the matter, which is very fair. And principle is we charge dirt cheap for this platform already. We should be charging triple what we do. But, we try to get rates down and fees down, because it's like we want it to be accessible to as many people for as cheap as possible. So love you guys. Fuck this trading day though, right? I should have probably closed at the yellow line, but whatever. Irrational, everything's weird. Outside of DD bands, everything's weird. S&P is looking to fill its gap. Question is, do I want to take a bet? I mean, we're outside of DD bands. I don't know if I want to do anything at the gap fill, but I think there could be a possibility for a bounce there. There's also a red line in the way. So let's just kind of take it easy today, guys. This 47.35 is a red line. I'm going to mark that on the chart here as well. So these are pivots that are going to matter. But listen, the next month, there's going to be so many changes to the platform. You guys are going to love it. Most of them are optimization steps, and then the marketplace comes out. So it's a good month, right? Okay. So we'll be good. Hold on, got so many things going on today. All right, guys. I love you guys. What do y'all want to do today? I'm gonna close out the stream. What do I get going on here? I got so many things I need to be working on. One of the things that we're working on is getting trader funding programs inside of our platform. That's one of our little secret projects. It's not so secret right now. So that you can do your trader funding inside of our platform, like your eval programs. Scheduling some meetings to get that going off. The marketplace is coming out February 1st is the targeted launch date. We already have test vendors with vendor pages that are able to work on that. We've got some fixes we're putting into the platform this month. Like we're building some data proxy, polishing up futures a little bit, getting that SIP data feed coming through. The memory crash issue, like the platform and child charts are open for too long. You can have that out of memory, force it to refresh, trying to fix that. And the service status alarms and the integrity status alarms of the different features we have in the platform, which would alert us like data feeds down or hedge pressure's missing or this and that. We would get like a feed. The way I'm going to do is I'm going to program the Discord bot to write to me in a separate channel a feed that something's down. So the minute it's down, we'll know, and then we'll convert that to a message for everybody so that everybody's on the same page at the same time. These are all things we're working on now to improve the platform and get right for the marketplace launch, right? Which is super exciting. So great question, Irene. So the three exchanges there's two different industries, right? You have a futures and commodity side, and then you have the equity side. Each one of those, well, there's actually options would be a third, I guess, if you consider, even though it's part of the equities world, it's a third source. So data independently, they don't mix and match. So you're going to pay $3 for the futures. $3 for the equities data. that goes to the New York Stock Exchange, NASDAQ. Those are the people that charge those fees. Futures is going to go to each futures exchange, and they're going to charge their own fees. Options is going to go to Opera. They're going to charge their own fees. So there's no like all-in-one data package. And you'll notice that when you go to other platforms and sign up, they usually have you choose which data you want. Each data, if you pick 3 different things, you sign up in 3 different sign-up processes, and you'll notice that as well. You'll fill out your exchange, form for New York. You'll fill out your stuff for futures. You notice if you remember Thinkorswim, you sign up. You actually just get your equities data. If you want futures, you have to go sign up for it a second time. That's because each exchange has their own protocol, and unfortunately, there's no like all-in-one. It'd be great if there was, right? But it's like you got, Coke, Dr. Pepper, and Sprite. It's like 3 different. It's all market data to you as a trader, but it's 3 different completely separate run companies that have their own ways of doing stuff. So it's to build a trading platform, just so you guys know, it's a feat of strength, and it's very difficult to like build something like that has a seamless feel to all of you guys. And people that make successful trading platforms like us and others figure out how to do it. But you're experiencing, like when I switch from futures to equities by just clicking a button, I'm actually turning on 2 different data feeds, right? There's a futures data feed, like equities. I click equities, and look at that. The platform did all kind of stuff that you didn't even notice. See, the DOM went away and things like that. It almost feels seamless to you, but it's actually connecting to 2 different services. And like, look how spotless that was, right? So unfortunately, each industry is going to charge you their own fees differently. And here's this randomness we talk about from the DD band break and float failure. Market's just going to randomly flip-flop around. Not a good day to trade, good day to sit out. The futures data is still, for now, again, going to cost the API fee, which is $10 a month to CQG, and $1 a month to Top of Book CME Group for the data. So the CME charges $1, CQG charges 10, it's 11 a month. Now, when we explore this new option, there's a potential that we can get it even cheaper than the 11. So I'm looking into something new, and we'll get back to you on that. We'll see how that turns out. Boo, crummy data. Tell me, crummy day. Okay, we love you guys. Oh, let's see. I'll be out of town next week. I'm going to go to New Orleans from Sunday until Thursday. I'll be streaming every day, though. So I'll be out for like a week. But still available and still working. Oh. Feel free to give a follow on Instagram. Don't want to have, that's me. Let's see, it's 10 o'clock. All right, tomorrow I'll give you my New Year's story. Forgot to do it today. I had a great New Year's. It was fun. All right, we'll see you guys later. I love you. I got a lot of glitter to go vacuum up for my living room. Thanks for tuning in. We'll see y'all tomorrow. I did close my trade, Steve. It was like $300 loss. I'm out. I just didn't like it. Not gonna fight it all day. We'll see y'all later. Zoom call today at 4.